First, I want to ask a question to the audience. Does anyone here know what TAL stands for? Nice. All right. So, Scott, I want to start this conversation by saying it's nice to have this intimate conversation with you. I'd like to start on that basis and just ask you a personal question. I know you started your career as a consultant and then a VC. You worked in the e-commerce sector. You worked in the media sector, digital media. So how did you end up in this particular sector, in education, investing capital for one of the largest companies in education in China and the world, and one that happens to be called Tomorrow Advancing Life?
Yeah, and I think to start with, I would rather to shed more light on the TAL first. With the name of Tomorrow Advancing Life, actually in Chinese it's called Good Future, but in English we translated it into TAL. And now it has already been the world's largest education company in terms of market cap. It is listed in the New York Stock Exchange with more than $20 billion US. And the reason why I joined the company is because I have more than 10 years experience in the VC and PE industry in China. Just as Josh said, previously my focus was more in the e-commerce sector in the very beginning, but then I shifted to the digital media sector because all the physical goods sold online are entering into the stage of kind of highly competitive in China. Then I was thinking, why not to focus on the sector which selling the intangible goods, which is media-related contents. And then I realized that in terms of the so-called digital media, there are two types of goods to be sold. On one hand, it's all about entertainment, and it can be how to help people achieve the happiness. But actually, entertainment is something really volatile. You can hardly create something with long-term entertainment value, especially in China, the younger generations as such a vibrant interest point. But then I also realized that in terms of the digital media, another type of the content carries a long-term value, which is education. Because on one hand, if you can really get attention of a group of people, education can provide them for even 5 years or more than 10 years of service. That's one thing. And another thing is that if you create the real good content for education, for example, the new concept English, it can really serve the market for even over half a century. So I think definitely education is the right thing to do in terms of the new media sector. That's what I defined. And I also realized there's another very important trend make the education highly promising going forward, because it has become the only last frontier across all the industries. I guess maybe healthcare is another one, but education is a remaining field to be transformed by internet. When I look at the e-commerce sector back to 10 years ago, the situation is really like what is now for online education. So I do foresee the huge potential for internet to create a totally new sector, and that can present a tremendous market opportunity, just like what happened in the China e-commerce sector.
Thank you. So can you talk a little bit about the market opportunity in China and what some of the trends are? And I know you're very active abroad as well, looking at markets like the US and India. So I'd appreciate it if you could, after commenting on the internal trends, also talk about some of the similarities and differences that you see between the Chinese market and some of the other markets that you look at.
Yeah. So when I look at the online education market, I would say the market potential can be a good comparison with the e-commerce 10 years ago. For now, when you look at the China's e-commerce market, more than 20% of the total transactions are happening online. So I would rather say for the education sector, it will be the same thing, maybe 5 or 10 years later. In China, the education market is a kind of $500 billion US market. So if you take that and apply to 20% also, you can see what is the potential for the online education. That's a major factor. I would rather to spend most of my time looking into the EdTech related stuff. And in China, I would say the online education can be focused around 2 points. One is through the all kinds of online approach to get access to millions of students. For example, most popular app, online education app, which is called 作业帮 or Homework Gang in China. It has daily active users of 12 million students every day. So you can see through this kind of online apps how many users you can reach. And then by getting access to the students or the users, you can deliver most of the contents electronically. No matter it's in a new media format such as live streaming or recorded videos, or it's just very original letters and pictures. I just feel this kind of technology has enabled the EdTech companies to not reaching millions and millions of users, but also deliver values to them. When I look at other countries, I just feel this kind of situation is happening everywhere. But frankly speaking, I would say maybe in other sectors, China is learning from the States. But in the EdTech sector, China is already definitely the most advanced in the world. I guess that's because China has the world's largest education market. And we do share this kind of culture with Israelis. Chinese people value education so much, and the parents want to pour in huge amount of money on that. So in China, for example, no matter it's online course or it's online education tools or it's other new media contents, has generated in those areas, I think more than 5 to 10 unicorn companies has been there. But when I went to the States, I just feel much less unicorn companies existing. That's the first thing. And secondly, when I look at the US EdTech market, I would say most of them, so-called EdTech companies, are related to the B2B sector, or it's more like to serve the public schools to help them increase the efficiency to teach the students. But the B2C market, which generally presents even bigger opportunities, it's kind of vacant in the States, because in the United States, the individual users or the individual parents tend to not to spend too much money by themselves. They just feel, okay, the public school system is sufficient. They do not have the culture to spend extra money. So that's the difference with China. But when I go to India, I would say, if China normally is learning from the States, India is definitely learning from China, especially in the EdTech sector. I'm talking with several of the leading EdTech companies in the India market. For example, one is doing the online live streaming courses. The founders are very brilliant young people, but what they are doing is they just look at what is happening in China and try to learn from every step the Chinese peers are doing, and then just customize that to India local market. I think that's really like what's happening in China 10 years ago when the internet market just came into being. Chinese entrepreneurial companies are learning closely from the States, and this is happening in India. But I would rather to say what's happening in India is very interesting because traditionally speaking, India does not have a very strong offline education players. I mean, especially the private players there. So India does have the opportunity to bypass the so-called traditional offline business model and directly enter into the online education era. This is just similar to what's happening in China for the online e-commerce sector. Because when you compare the online e-commerce sector in China versus US, you will find the US markets, the offline players are very strong too, because they have such strong players like so many existing retail chains. But in China, there was no retail chains existing. So large companies like JD.com or Alibaba, they just took almost all the opportunities from the original offline business players and became the dominant players in the retail sector. So I would say in India, EdTech companies do have huge opportunities and they could beat all the offline players.
So let's drill down into that. I mean, this is called an EdTech conference, so the focus obviously is on technology, but clearly some of the most successful education companies in the world rely on services as opposed to technology, or at least technology-enabled services. Your company has, I believe, approximately 600 learning centers spread out throughout the country, and so you're still delivering education in person, in bricks and mortar facilities, but at the same time, I know you're prioritizing online platforms and mobile platforms. So how do you and your company think about the interplay between technology and live instruction? What's your philosophy there, and how do you think it'll unfold in the future?
I would say the best education the best education must have person involved, because I think it's kind of natural for people to get best learning from a good teacher. But the teacher can be in the physical world, or the teacher can present themselves in the digital world. If you, for example, if going forward, when the AR or VR technology really matures, I don't think it's necessary to have the natural human teachers. You can create a digital teachers, but with all the features like a human to teach the students. But that could happen maybe 20 or 50 years later. For now, we still think the offline bricks and mortar mode will still be a dominant approach to teach students. But to consider how to increase the efficiency and how to increase the cost effectiveness, online is definitely the best way, because human capital is so expensive, especially if you want to have the good teacher and maintain them. It's hard. How can you help a teacher to teach hundreds of students or even thousands of students that will definitely leverage the internet technologies? For example, for TAL, annually we have more than 1 million students coming for our offline learning centers to do the after-school tutorings. But in the meantime, we started our online courses about 5 years ago. And now, every year, there are around 300,000 students already, about 1/3 of our offline students. And it's growing at a speed almost 200% annually growth rate. So I would say next year or so, it will have similar number of students online. And with the offline model, a good teacher can only teach a small class, normally 20 students. So how much the teacher can get, you can see. But if it's our online model, the master teacher can really teach hundreds of students, facilitated by a dozen of teaching assistants, because the students are divided into small groups online, but they all look into one master teacher. So how much the master teacher can get, you can see. That's the best way to retain the best of the best teachers and motivate them to produce highest quality class. So I would say within the foreseeable future, similar to what's happening in the e-commerce sector in China, online presents about 20% of the total retail volume in China. But in education, I would say going forward, I can see online could present also 20 to 30% of the total market share. So huge potential going forward, but I would rather still emphasize that offline model with real teacher is still the main business model in the next 5 years.
And do you believe that live instruction and online will operate in different silos, or do you see a world where ultimately blended learning is the most reliable model and ultimately is the more successful business model? Blended learning.
Okay. I think the combination of the online and the offline is definitely the best effective approach. And I would say going forward, maybe if you want to get some inspiration from the real teacher, you need to go to the offline classes. But if you just want to learn some knowledge and try to practice, you can just go online. But if you are in a remote area and hardly to have access to the real teacher, real person, the VR or AR technology can really facilitate you to achieve that. So I think this kind of the mix will be the future going forward. I think I would rather to use the e-commerce as the example again. Previously, people thinking e-commerce is just e-commerce. It's totally different from the online. It's totally different from the offline retailing business model. But what's happening now is that after 10 years of explosive growth for the online e-commerce, all the major e-commerce giants are trying to develop their offline channels and offline existence because they still believe people can hardly just live in their own room and just watch the screen to do all the everyday life. They need to go to some real shops. They need to go to real restaurants to do some consumption. So they want to combine the online and the offline together. That's what we call the new economy in China. And that's what drives the Alibaba's market cap growing so fast recently. So I would rather to say for EdTech, it will be the same thing.
It's an interesting point. Amazon, as I think everybody knows, is now opening bricks and mortar bookstores. And if you go into an Amazon bookstore, what you see is they're taking a lot of the lessons that they learned online and bringing them into the bookstore. So you've got all of the data that they collect online is working its way into the stores, and a lot of the techniques they use. You'll see a column of books and a sign that says, if you like this book, with an arrow, there are like 5 other books. I agree with you. I think what you're saying is, we may see a day where a lot of the lessons learned online filter back into the bricks and mortar and enhances it. So I want to move now quickly to your investing activities. As I understand it, TAL has an annual budget of around $300 million to invest either by taking minority stakes in companies in China and abroad or making acquisitions. That's a staggering amount of money outside of China. And so I'd like you to speak to how do you fulfill a budget like that? And I also understand most of the activity is likely to be minority stakes, not acquisitions. So where are you sourcing those opportunities? What are the priorities? How much of it would be in China versus abroad? And if abroad, what are the target markets? And I'm ultimately going to segue to Israel, so you can reserve your comments until you finish answering this question.
Yeah. First, I want to clarify that we do not have a specific budget on annual investment size, but over the past few years, when we do the calculation, we can see roughly every year we invest around $300 million or so. It totally depends on what kind of deals are happening, and if there are some mega deals happening, we can do much bigger than 300 million. But if it's a lean year, we can do much less. When we look at the strategic investment, we would say I also talked with some other friends in this sector. We noticed that in the States, strategic investment is mostly about merger and acquisition. But in China, strategic investment is a new concept initiated by the internet giants. such as Baidu or Tencent or Alibaba. But they are doing totally different way because it's an internet era. The most important thing is not to acquire a mature business which can give you maybe 10% revenue expansion on that. The most important thing is how to find the most entrepreneurial company which could boost your existing business and give you a lever so that your entire business will grow at a much enhanced growth rate. And in the meantime, you want to find the potential entrepreneurial companies which could threaten yourself, right? Because the innovation is so rapid in all the internet-related sectors. So we do not want to, basically we do not want to we do not want to be beaten by those new companies. The only way to leverage their potential is to build up this kind of equity linkage with them and leverage their growth and share the benefits of their growth. So we would rather to spend more money on the minority investment. Over the years, probably we started as a minority investor, but the company does show the potential to have some breakthrough effect in the industry. We can gradually increase our stakeholding in the company, and probably in the end we can become the controlling shareholder. That's a typical way what we are doing in China, and that's what we are also thinking in the global market. Having said that, we also do merger and acquisition as well, because we believe in that for some products and in some sectors, winner has been very clear. If that's not what we are good at, why not we just invite that company to be part of ourselves? But that's only depends on whether the target company share similar value and we can really work together. Because we believe that people is definitely the most important asset in the company. And if you cannot work together with the people, all the acquisition is kind of useless because you are not investing in their existing revenue. You are not investing in a stable business. You are investing in their entrepreneurship and investing in their innovation.
Fantastic. I have time for one more question, and I'm going to ask you about Israel. So you've traveled about 4,500 miles to come here. I understand this is your first trip to Israel. The population in China is, I think, 165 times that of Israel. What are you interested in here? Why did you make the trip? What do you think Israel can offer to you? And to the extent that you're interested in exploring opportunities here, always with a view towards bringing valuable technologies and talent back to China, how would you recommend to the audience of operators and entrepreneurs that they access the opportunity in China? And it doesn't have to be exclusively through TAL.
I would say, first of all, personally, I'm a big fan of Israel because I have been a military fan since very young. Back to 20 or 30 years ago, I know, although in terms of size of the country, Israel is not too big, but in terms of the military power and in terms of the technology advancedness of military, Israel is definitely what China needs to learn from. And secondly, I have been in the VC and PE sector in China for more than a decade. And over that period of time, frankly speaking, the Chinese investment circle has high respect toward Israel. We have Chinese companies and the Chinese VC and PE funds started overseas investment about 10 years ago, or maybe 15 years ago. But since the very beginning, we feel US is definitely the first place to go. But after that, where to go? Israel is the second place because so many cutting-edge innovations generated from here. It's a kind of too late already for me to be here to now. But I would say more and more Chinese internet companies or tech companies do want to come to Israel and want to be teamed up with Israeli entrepreneurs. And in terms of what kind of company we are interested in, I would say, first, Israeli companies have superior innovation. I want to see the innovative products, and we want to help them to achieve the global access. Especially, the market in China is so huge, but the development in China is too fast, so that in many areas, there's no sufficient time for R&D people to be patient enough to develop well-rounded and cutting-edge products. But the markets are there waiting for the top products. So I would rather to team up with entrepreneurial companies here and present them with the opportunities in China and help them to build up the channel, especially backed with TAL brand, especially in the education sector. We do have the best brand name in China. And in the meantime, we also want the Israeli companies to expand globally, because I think Israeli people have much better understanding of the Western world, has much better understanding of the US market. If we, Chinese team, go to the States, a lot of difficulties. But if we can sponsor or finance the Israeli companies to go to other markets, especially Western markets, that will achieve much higher efficiency than what we do. So we can present this kind of two angles for them.
Well, if you were interested in automated driving, then it might be too late to be here. But since you're interested in EdTech, I think you're right on time. Thank you so much for spending time with us.
Thank you.